Welcome to Finance with Shahrukh. On this channel, we talk about finance and the economy in simple terms. Let's begin.
In the late 1980s, Japan looked unstoppable. Then everything collapsed into the lost decade. How did this happen?
By the 1960s and 70s, Japan shifted into overdrive. Factories ran day and night. Japan was racing ahead. Soon, the world took notice. Japanese brands crossed borders and conquered markets. Cars filled highways. Inside Japan, prosperity felt stable. Jobs were secure. Unemployment was precision. Workplaces ran like clockwork. This success was no accident. Government and business worked as one. Policies aligned with industry. Growth was planned. Technology became Japan's weapon. Robotics was manufacturing. And it wasn't just building products, it was building the future. By the late 1980s, a question echoed around the world. Could Japan surpass the United States? Confidence surged. American dominance was being challenged.
Something we directly. Beneath him is success. But crises rose to famine.
During the mid-1980s, Japan's central bank kept interest rates at historic lows. Borrowing became incredibly easy like water. Banks saw the opportunity and lending accelerated rapidly. Real estate stocks, loans were everywhere. Business leaders and investors believed this boom would never end. Land prices began climbing toward the sky. Tokyo's skyline wasn't just growing taller. Every square foot had turned into gold. Real estate became Japan's biggest bet.
The stock market refused to be left behind. In just 4 years, the Nikkei and Nukenbacker every day in Hotu.
There came a moment when Tokyo's land became the most expensive on earth. A small strip of property was worth as much as entire cities elsewhere. The boom had reached its peak. Companies began using land as collateral to borrow even more money. Land was no longer just an asset, it had become a machine for creating cash. Factories and real production slowly faded into the background. Instead of building things, people focused speculation had overtaken productivity. Japan's economy had reached a fragile stage. Everything was rising, but with Fwadisbal on the verge of bursting. 1989, Japan's economy was touching the sky. But the Bank of Japan saw something else. So they made a decision. Interest rates were raised. A simple policy move, but that one decision changed the direction of the entire economy.
Borrowing money, once easy and cheap, suddenly became expensive. Companies running on borrowed cash began cash flow to high.
For years, asset prices only went up. People believed they would never stop rising, but suddenly the graph went flat. And when growth stops, fear begins. Fear turned into panic. Panic turned into selling. At the Tokyo Stock Exchange, red numbers flashed everywhere. Then came real estate. Land once worth more than gold started losing its value. Skyscrapers still stood tall, but their prices were sinking into the ground. The problem was simple. The loans were still full size, but asset values were cut in half. Debt taken for growth became a crushing burden. Banks believed these assets would protect them, but inside their vaults, only p-value remained. Afflis prating touristum, the bubble that had been inflating for years, finally burst. The economic miracle had become history. The markets fell silent. The cities were still lit, but hope was gone. This wasn't just a crash, it was the beginning of Japan's lost decade. By the early 1990s, Japan's banks were in serious trouble. Behind polished desks and quiet offices, their balance sheets were collapsing under pressure. They were loaded with non-performing loans, money that borrowers could no longer repay. On paper, these loans still existed. In reality, the money was gone. Instead of revealing the damage, losses were pushed into the shadows, hidden, delayed, and ignored. The system chose denial over repair. Banks continued lending, not to strong businesses, but to companies already on the edge. Credit was no longer fuel for growth, it was life support. These firms became known as zombie companies, alive in name only. They survived not because they were productive, but because banks refused to let them die. Capital remained trapped inside weak, unproductive businesses. Money that could have funded innovation was frozen in failure. As resources stayed locked in the past, new ideas struggled to survive. Innovation slowed, risk-taking disappeared. Economic growth stalled. The engine was still running, but the wheels were no longer turning. Japan avoided a sudden financial collapse. There was no dramatic crash, no single breaking point. But the cost was long-term stagnation, years of weak growth, lost momentum, a nation standing still while the world moved on. Tokyo never stops. But in the 1990s, even this city began to feel quiet. Shopping malls once filled with crowds were now. This wasn't a sudden silent. Then prices began to fall. One product became cheaper, then another, and then everything. At first, people thought it was good news. Normally, prices rise over time. Inflation keeps an economy moving. But in Japan, the line was moving downward. The first effect of deflation is a change in how people think. A customer picks up a product. When customers stop buying, business revenue falls. And when revenue falls, profits disappear. When the crisis became impossible to ignore, Japan's government finally stepped forward, not with panic, but with control. Interest rates were pushed down, lower or until they were almost zero. The idea was simple. Banks were at the center of the crisis. So the government chose to directly into the system, but simply to survive. Then came public spending on a massive scale. Highways, bridges, endless construction. But the roads remained empty. Demand never returned. People still didn't spend. The banking system stabilized. No collapse, no chaos. But there was no energy. Other countries would later choose shock therapy, fast, aggressive, and risky. Stability over force. And so the economy did not collapse. But it didn't recover either. Growth flattened, years passed, nothing broke, yet nothing healed. What began as the lost decade quietly stretched into 20 years that never end. Economic stagnation doesn't stay on balance sheets. It slowly reshapes everyday life. Even the morning rush grew quieter. For decades, lifetime employment was more than a job, it was a promise. That promise began to fade. For the younger generation, the future narrowed. Opportunities became scarce before ambition met closed doors. When confidence disappears, so does planning for tomorrow. Families waited. People didn't stop spending because they lacked money. They stopped spending because they lacked certainty. The world was watching. Japan became more than an economy. It became a warning.
Economists studied Japan intensely. They analyzed what happens when growth dictated what systems remain standing.
They focused on familiar dangers, asset bubbles that grow too large, and bank systems that survive but never truly heal. Japan's lost decade isn't just history. It's a warning, one that still speaks today. Economic bubbles don't fade away. They burst. And the damage doesn't end when prices fall, it lingers. When painful decisions are delayed, crises don't disappear. They stretch, sometimes for decades. Japan showed how excessive speculation can lift an economy and then trap it. What rises too fast? Weak banking reform kept broken systems alive. Stable on the surface, but fragile underneath. Survival replaced recovery. Deflation is silent. Prices fall, spending waits, and growth slowly suffocates. Japan didn't collapse, but it paid a heavy price for caution. Time was the cost. The lost decade reminds us, strong economies don't fail overnight. They fade when action comes too late. Sometimes, surviving a crisis isn't the same as escaping it. That's all for today. If you liked the video, please like and subscribe. See you in the next one.